Hi, this is Zach Mir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 26th of October. Starting off with the FTSE 100, which is resting in the support zone just below the 7380 area. That was the old September support, so we're just trading either side of that. We've had four probes below that in the recent past, but really looking for an end of day close back through 7430, yesterday's resistance, to try and unwind the recent breakdown for the UK market, well, the leading index anyway. Otherwise, below 7370 on a consistent basis, and we could be heading for a final drop towards the floor of that falling trend channel from February at 7150. So 7150 currently looks like the worst on offer for this autumn sell-off. Otherwise, through 7430 will delay that scenario. Maybe onto the DAX, and here it was not a pretty picture even before the month started, but that rolling top there from the summer, a gap down last week, didn't manage to fill that gap, and another gap down today, so not great, and unfilled gaps to the downside. The second one especially makes this market look vulnerable to a retest of March support there, just under 14,500. Would be surprising if we didn't see that level some point soon. RSI at 31, so not oversold yet either, which is also not helpful to the bullish cause. Moving along to the Dow, and here it was all about, and is still about, holding on to the floor of that rising trend channel that's been in place since this time last year, and the level there around 33,000, so a dance either side of that level. Upside here at the moment, the 200-day moving average is at 33,800. The downside would be a retest of May support there around 32,500. Worst case is that we go down to the floor of that broadening triangle from last November at 30,500, but hopefully it won't come to that. Best market out of the majors by a yard mile is Bitcoin, and here pushed up to that resistance line projection there from back in February, which seemed so far away even just a week ago, but gapped up through resistance. Another positive there, the resistance there around 32,500. Above that, we're looking for consolidation and then a move as high as 43,000 by the end of next month, given that we managed to rally with an unfilled gap to the upside, and also given the way that the 50 and 200-day moving averages are both rising. There should be a golden cross between them over the next week or so, and the run-up to a golden cross tends to be the strongest part in the cycle, and that is what we have at the moment. Moving on to the stocks, and the cupboard relatively bare, as you might expect with the way the FTSE is at the moment. Arc Minerals is the first contender here, sharply rising 50-day moving average, bear trap to start October, below 2.3 pence. So a couple of ticks there, and breaking the 200-day moving average at 3.3 pence for the third time, and breaking the initial October resistance around 3.3 pence. Above that, on an end-of-day close basis, initial target here up to 4 pence or 4.1 pence, and then ultimately we could see up to 5 pence by the end of next month at the top of that broadening triangle from the beginning of the year. But the bear trap and then the high-low should be enough to take ARC over the top on this occasion. On to Contango, where people were obviously had very strong psychic powers yesterday, and the shares were rising through the latter part of the session. There was a bear trap from below the June support there, 3.4 pence, and current position is that above the 50-day moving average at 4 pence, we're looking for the shares to not only revisit the initial target that we've had at 5.3, but actually head maybe as high as 6.5 or 6.6 pence at the top of a December broadening triangle by the end of next month. But the key here is actually remaining above that 50-day moving average area and initial October resistance. Actually disappointing that the shares aren't up higher than just 8%. I think that's a little bit unfair, let's say, especially given the technical picture that we've had, and obviously the news that was released today. On to Cornish Metals, and here bear trap gap reversal, so a newer low there last week and then gapped higher, so that's one signal. We've got an uptrend line in the RSI window. That's two signals, so we are looking for the shares to perhaps head up towards the 200-day moving average at 13 pence, maybe by the end of next month. The best case scenario would be up to 15, which is the top of that broadening triangle from back in March, but obviously early days yet, and we want to see the shares remain above 9 3/4 pence, the old July support for this stock. On to Caracal, where there's lots of fundamental activity going on, and but the charting situation relatively clear. We've got bullish divergence line there. We've got the shares breaking through the 50-day line and finding support at and above that level now at 0.23. Above 0.23, we were looking for 0.38. We missed it at the start of the week. I think the high was 0.36. But above 0.38 would be the big breakthrough up to 0.6. But obviously there are aspects such as the company's accounts, etc., and share suspensions, etc. But at least while we're above 0.23, looks like a turnaround situation at Caracal. Speaking of turnaround situations, we've got Greatland Gold, which has, it was attempting to get through that rather sticky 8 pence level. That's the level that we really need, but sort of 7.5 to 8 pence has been the resistance for the shares. Very irritating resistance since May. End of day close through 8 pence, and we could be going up to 10 pence at the top of that broadening triangle from back, this time last year, and hopefully we'd hit that by the end of next month. So looking for another push through 8 pence, especially while we're above the 200-day moving average at 7.25. We'd like to stay above that. We've got the 50-day line now rising as well, so that should ensure that maybe this is the final push to the upside for Greatland. On to Harland Wolf, which had great contract news last week. Unfilled gap to the upside, bear trap gap reversal, which is obviously just what we like here. Above the 50-day moving average at 13 pence. We're still looking for the top of that rising trend channel from April at 20 pence, and hopefully we'll see that by the end of next month. Ironveld is the next contender, and here, if we get the right chart, we can see that the shares have delivered what looks to be a bear trap from below the old 0.25 support that they had back in 2022, the end of last year. So above 0.25 with a gap, looking for the shares to maybe get up to 0.35 at the top of the recent range by the end of next month. A bit of bullish divergence going on in there as well, helping the cause. So two decent technical signals. On to CHROMEC, which looks like it's recovering as well. Bear trap gap reversal from below the old May support there at 4.8 pence. We're just below that at the moment, but an end of day close above the 50-day line should be enough to get the shares up to as high as 7.5 pence by the end of next month. There is a resistance there at around 6 pence, but the overall pattern with that bullish divergence and the unfilled gap to the upside should take us up to 7.5 by the end of next month. Moving on to Oxford Biodynamics, which is one of the heroes of the early autumn. Here we're bouncing off the old resistance area around 30 pence, bit of a bear trap there from below 31 pence, above 31, looking for 40 again over the next week or so. Maybe a bit too early to look for 50 anytime soon, but 40 while it's above 30 seems to be a simple range trade. On to TomCo, which is never an easy stock, but here we've got a situation where we seem to have a broadening triangle. We had a gap higher earlier in the month, and finding good support here above the 50-day moving average at 0.065, and a couple of nice candles over the start of this week as well. Looking for the shares to break through 0.08, head up to maybe up to 0.13 by the end of next month, but want to stay on the right side of 0.06 then. One of the more dramatic charts of the week has been Upland, and here the blink and you missed it move to 8 pence, and then the retreat. We were saying before that we want to see the shares remain above 4.75 pence, and that was the low of Monday, and obviously they haven't done that. There may be an opportunity now, given the massive rug pull and probably a few burnt fingers, to buy against the floor of the gap there at 3.4 pence. The low today so far 3.25, so it looks as though we've had a gap floor rebound, and so above the 3.4 pence area, looking for the shares to at least head back towards 4.75 or 5 pence over the next few sessions. Finishing off with ValiRx, and here the things have got rather messy after that attempt to get through the 12 pence level on a sustained basis, but there's some hope here for the bulls. The shares finding some support there at the 200-day moving average just below 9 pence. While they're above that 200-day line, hopefully we'll get back to 12 pence even as a temporary rebound. That's it from me today. More updates tomorrow.